It's a pleasure to have you this beautiful Monday morning. Welcome back from that short break. And this is the DAYBREAK Africa, reaching you live from the Lagos studios of KAFTAN Television. Today, we'll be having a conversation quite different from the usual conversation. Today, Monday, is when we get to bring to you political-related issues, but today will be a little bit different from the usual. Today, we'll be talking about finance. Today is Finance Monday, Money Monday. And we're talking about finding the safe spot between investment and risk. And to have the conversation is a Chief Finance Officer who goes by the name of Wemimo Akintan. Good morning to you, ma'am.
Good morning.
It's a pleasure to have you this morning.
I'm glad to be here.
Great. Before we go straight into the talking point, let's just have your view about just concluded presidential tribunal, the back and forth, the election, post-election, and just your own overview of it.
I think that whatever is happening right now is not something that is within our control, and whatever it will be at the end of the day, we just hope it turns out well.
So at the moment, you just feel like we should accept it, or they should proceed to Supreme Court.
Truth be told, I don't have any stand on whatever is going on, because I think that even when they proceed, the result might end up being the same.
Great. Now let's talk about finding a difference between investment and risk. The two look alike and they almost have the same meaning. Now, would you please define what you mean by a safe spot, rather, when it comes to balancing investment and risk in business?
Actually, I think that risk and investment are inseparable, because the reason why we call it investment is because there's a risk attached to it, and there's no how it's actually an investment if you are not taking any form of risk. But there is usually a state where people make the mistake of investing, and at the end of the day they regret it because they did not know that investment is just presenting itself in that light, in the good word, but in the actual sense it is risk. So when they come to you with an investment opportunity, they are telling you, oh, we want you to embark on this risk with us. Not actually investment, just that risks have the type of activity or the types of engagement that have the highest potential to reward you for embarking on it. So risks and investments, they are inseparable.
So I want to understand now, when you say investment, when you say risk, they are intertwined. But then does it mean that the investor is not properly educated or informed on the risk attached to it? Because most times you see people just talking about the benefit of the investment, not even thinking about the risk attached to the investment. So is it the information around that circle now? Who is it best for? Is it the investor or the person who is actually calling out for the investment?
I think it's both.
Okay.
And I think investors have full knowledge that there are risks involved to these things, and I must even actually give accolades to investors because they know what they are going into. And for someone to call himself an investor, he has a level of audacity to call himself that, because investors, if you have actually been an investor, you know that not everything goes well. And there are sometimes I believe they should be exposed, or they should have the experience to know that not all investments will go well. So they have the knowledge, they have the idea that, oh, this thing I'm dabbling into is a risk. But because the reason why I'm being rewarded is for the fact that I am taking this risk. But not all people know that. So some people just want to call themselves investors, throw money here, throw money there, and at the end of the day, you see the difference in the result that both get, the one with the information and the one without the information.
Before my guest, my co-presenter goes on now, how do you identify the right investment, identifying the right investment that has all its risk, you understand, but identify it as a viable investment that actually I can take on this risk?
Making research on every investment before you dabble into it is actually one thing that I would advise all investors to do. I think that before you go into any investment, you should make your research. Because all investment, there's no investor that will come and tell you, oh, these are the risks involved. They will just promise you the good things just so because they want to they want you to invest in that business, and they want you, that's just what they are into. So they will never be so open or plain to you to tell you, oh, we are not so sure that in the next 5 years things will turn out well and you will be able to give you a return. So it's important for every investor to know and make research and not just listen to, and that's why for every investor the company will always give you time, or we always give you access to information. So when at the phase of investing, when they are still proposing the investment to you, you have the opportunity to probe or ask questions, and they don't have the right to withhold information from you, except you are asking some very, very sensitive information. You can ask for the audited financial statement. Okay, let me see the results you've had over the years. Let me see if it's something I can invest. What's your returns like? They are not supposed to hide such information to you. And sometimes you don't just need to listen to them. You need to get an actual record or just paperwork to see that paperwork even doesn't mean that you are safe, but it's just you doing your own due diligence. And I actually think that investment is also more of your personality type. So an investment that is viable for you might not be viable to another person, because we have different types of attitude to risks. Some people are very excited whenever they hear in fact, we call them risk seekers. So they go all their way out to look for opportunities that, oh, this thing might be good. So
they only see the opportunity, they don't even think about
yes. And that attitude to risks might be good and might not. Because if you are too careful, or if you are too if you try to reason investment too much, it might make you want to withdraw from actually taking investment.
Now, I want us to go a little bit into relatable businesses. Let's talk about real estate, for example. It seems to be the new ritual now that everybody is dabbling into. Now, would you please mention or list some key factors that entrepreneurs should consider while assessing the level of risk associated with an investment, making real estate as an example?
Okay. So for real estate, I think real estate is one of the business that has promising potential to give you the return that you want. You see, for most real investments, their real estate investment deal, they promise you even something more than 30% return on investment. And it's not to say they are lying or they can't give you that return on your investment. It's just that real estate, you know how you can invest in real estate and double up the amount, because you know, buying of land, buying of this asset are not a small deal these days. You can buy a land now, and in the next 2 months, you are selling it times 2, because you never can know what will happen. But it's very difficult for you to see such assets like that depreciating. So they appreciate all the time. So when even thinking about investments, when talking about real estate, it might be one of those juicy kind of investments that you can go into. Unlike when you're talking about agriculture, it has a lot of risks to it, because a lot of farmers say, oh, they get returns on this, and at the end of the day, there's just this thing. You know how one fowl in the farm can just be affected, and then the whole chicken in the poultry are just dying. And
just like when egg sellers complained about how they were not selling and they had to start burying the eggs.
Exactly. So when people are investing in agriculture, I think that for every investment, you should be able to compensate you for the sort of risks that you are taking. So in real estate is even actually a good type of investment. But when we talk about agriculture, I know it is very risky, but the return, even if I might not get the return, but is the return going to actually appreciate me for actually dabbling or taking such amount of risk? So I think real estate investment is a juicy type of investment, one of the juiciest.
Well, you see, I'm a businessman.
Okay.
So, and this is sounding so interesting to me and very, very educative. Now, what I want to understand is a lot of people, a lot of investments are out there now. A lot of people posting things because the online is there, the internet is there, and it's so easy for anybody to say market one thing. There's even an online market, and so you can sit in the comfort of your home and buy a whole lot of things. And then when you buy these things with the names, big companies, not just small organizations, as somebody who is just selling from his home, but big establishments that has their shops even in Amazon and the rest of them. You find out that some of their products do not replicate how they advertise them, what they advertised. So for me, I'm looking at the final consumer, not just the investment, the investor. You understand? Who has taken the risk? Because after taking that risk, he is also going to consider his profits. At the end of the day, he's going to make profit, and he must recoup his investments. You understand me? So in trying to recoup his investments, the consumer bears the brunt at the end of the day. So how does the consumer, you understand, benefit, not from the risk now, but from the main investment, benefit from it, because he has invested his money and just to get the products. And that's so how does a consumer identify the right invested product or products or services or whatever? How does the consumer identify the right one, and not going to just buy something out there because the investor says it's the best?
Well, one thing that I found out that investors always ask whenever they make an investment is they want to see the people working on the team. They want to see who is the finance officer, who is the product manager, who is the chief technical officer in this place, because they want to assess if those people have the capacity to actually make drop down their investments to the fact that that product can provide solutions to the consumer.
The structure that created that investment, that created that thing, is what people should look at.
So it's the system around those investments. Sometimes people make a lot of large investments. You see this company, they're saying they have this amount of capital, and you're seeing their product and you're like, how? So it's the people, it's the team that are working with that investment. Because if you don't have a good team working with the money you've pumped into a business, they will just end up doing is to make sure that money is available. They get paid, they receive their salaries, but the results when it comes to the products that consumers can consume, now it's nothing to write home about. So I think that before investors invest, they should also make research about who are the team working.
Speaking about that, I once listened to a podcast where a lady said she has trust fund and she was able to have dollars in her own personal name based on trust fund. So she was asking for business deals she can invest on. Now, what advice do you have to anybody that has a huge sum of money, maybe some 5 million or some dollars stashed up somewhere, that want to invest in some business, and what should they look out for before investing? A businessman will pitch good investment, ROI for you. This is the long-term goal. This is the mid-term goal, all of that. But you yourself, like you said, you have to make research. But what are those things they should pay attention to more while making research?
Before considering the people even proposing the investment to you, there are some things you should look at personally. I've seen some people make mistakes where you need this money in the next 3 months. You need this money in the next 5 months, but you feel like because it's sitting idle right now in your account, you just want to go and throw it inside some sort of investment. And everybody, personally, we need to have the knowledge that investment is a long-term thing. So you only get the best of your investments when you are doing it for a long term. And that's why some people go into a business or do an investment, and in the next 2 months they are all shaky. This has happened. No, you should be very relaxed. You should think long term. So personally, I think there are some things you should look at personally to know if you are actually ready to invest before looking at the people proposing that investment to you. Now also, when you are investing, what type of risk? Because that's why we call it a safe spot. And safe spot is personal to you. This amount that you can invest and be comfortable with is different from the amount I can invest and be comfortable with. Some people, there's what we call the 50-30-20 rule in finance. So you spend 50% of your income on important things. Those are what you need, like your education, school fees. You spend it on your rent, on your feeding. Then you spend like 30% on indulgences or just wants, maybe going on dates. You want to change your wardrobe and all those things. But you see, 20%, we always recommend that you can go higher. We always recommend that 20% is being saved and invested, not all. So people try to, oh, I'm saving, I don't need to invest. That's not.
As a chief finance officer, would you prefer saving in naira or in dollar? And what are the advantages?
Obviously, in dollars. A lot of people love investing in dollars because you know how we've reaped.
Investing or saving? Investing
and saving.
Okay.
Both. You see, always doing your things in dollars. We know in Nigeria how this thing has proven to be very beneficial these days. At the end, when you get your money in naira and you see that, oh, the exchange rate is very, very, you know how it has been very, the move of the exchange rate has been really very, it has been very hilarious.
They say there is no advantage without the disadvantage. So there's always a disadvantage. They shed more light on that.
Yes, the disadvantage is that we always believe that the dollar rate, the exchange rate is going to increase, because we've seen the pattern over time that is increasing, and we know even if it drops, it can't drop below.
I think it has dropped.
Yes, it has dropped. Yes. But we know even if it drops, it's not like, it's still better than saving it in naira. I don't. But the thing is that, and which is still the same thing, investing in dollars and saving in dollars actually still has its own risks, because you don't know what the results might tend to be in the next few months. So when you were saving, you were doing it at 500 naira, and now dollar is increasing. You're like, okay, let me not withdraw yet. Let me just still keep this.
And all of a sudden it crashes.
And then when you need it, at the very point when you need it, you just see 400 naira, and you're like, no, this is a bad deal. So that's why I said that investment should be long term. So even when you see it's 400 naira, you don't feel bothered, because okay, no, let me just still leave it. But people that do it on a short term, they are like, oh, it's now I have to withdraw it, and at that point when it's going low, that's the time they withdraw, because they are afraid that, oh, it might go lower. Yes, and that ends up becoming like a very, very bad deal for them. So yes, saving in dollars and investing in dollars is better.
I want to ask a question on regulations.
Okay.
You understand? I'm very particular about how you regulate a particular sector. Because we've started the example of the real estate.
Yes.
And now you talk about, you work in the entertainment field, and so investing in these two different angles, agriculture seems to be a very risk-encamped sector. Yes. Especially in the country. It shouldn't be like that, but right now it is like that. So how do you think investment per se, how do you think it can really be regulated to the extent that when people invest, there is bound to be an investment profit, that they get the profits of their investment. It's not just like you say you invest now and the next thing you are panicking that, oh, this is falling and that is rising.
Yeah, I think that no matter the regulation that they do, it still boils down to the economy of the country that we are in. Because even these businesses that we are doing, these things we are investing in, so even if there's a regulation around investments, and there's no regulation, or not even, maybe there's no solid regulation behind those businesses, there are some points where you even want to recoup your money, and you are not getting what you want, but you can't even blame anybody, right? Because it's not their fault. It's not your fault. So I think that the government the economy, especially this country, we should sit and really think of how to structure our economy in such a way that Nigerians can always feel safe doing business. A lot of people have withdrawn from actually wanting to start their own business because of the possibility that this might work or this might not work. If we had a stronger economic system, I think Nigerians very passionate about establishing.
Yes,
You will be surprised. You'll be surprised of the numbers of businesses that we would have. You see a lot of businesses, a lot of people now, entrepreneurs, when they want to start their business, they prefer something online. Something virtual that they won't really need to pump in capital.
Yes.
They just need to dedicate an amount, because they don't want, yes.
Like this, or everything is just in the comfort of your home. And
yeah, exactly. So the reason why is not because they don't have capital they want to pump in, but they are not willing to take that risk. They are not willing. So they just want something that involves less capital. And that's why the one thing that I believe a lot of Nigerians will be searching for, businesses that can do without high or big capital. Because money, I can invest my time, although I want reward from actually investing my time. But money is a very sensitive resource, and nobody.
Very scarce resource.
Run us through some of the strategies or techniques one can use to minimize risk.
For minimizing risks, the thing is that when you're investing in this particular business and you feel that, oh, it's a good deal, some people always get tempted to pump in more money. Now you can see that is a good deal because you've invested in it, right? So when you have more money that you want to invest, rather than that is already sitting pretty in that investment, rather than doing that, why not try something else? That's where we come into the aspect of diversification. Instead of just doing this and believing that, oh, this is the only thing that works, try out something else. And then who knows? Mark Zuckerberg, there's a quote he said the biggest risk is not taking any risks, because you don't know. So why not? If not, just try it. And so putting in all your eggs in one basket is a very risky thing in investment, because you can only put in all your eggs in one basket if you believe that it's safe, right? And believe is not the word in investment. Anything can happen. And that's why we always advise investors to only invest convenient amounts. Convenient amount. Yes, my convenient amount is different from your convenient amount, right? But don't do an investment that at the end of the day this thing is crashing and it's now connected to your high blood pressure. You are now having high blood pressure because you made that investment.
So you know what? Invest something which, if it crashes, you can stylishly overlook.
Okay, I wanted to ask this question on, say, now people tend to want to say, okay, like you said, online.
Yes.
Everything is online now, because a lot of things is attached to people running to online. And you mentioned the economy.
Yes.
And I wanted you to mention, to just state the fact that some of the things that people are looking out for that is making them run away from owning a real-time shop. A real-time, everything, employing a lot of people. There are certain things that prevents them from doing all those things, and then running back home and then operating with just their phone. So some of these things, it's not everybody that has them, and it's not everybody also that has the education to actually operate some of those things. So how do you advise every Nigerian now, whether you are so educated or less educated, or you are just down there?
One thing I would advise anyone and everyone is that we should not be too one way with the way we think. So as Nigerians, we still have, you would not believe it, we still have some people with the mentality that all this technological something. And for some reason they are attaching religion to it. And it's just the fact that we are unable to comprehend and embrace and unlearn some things that we've learned.
If you don't understand it, we kick against it.
So it's the same way with investment. Some people have narrowed down their investment that this is a bad deal, without even getting the basic. Maybe what they've just heard is people say, oh, I did this and it went bad, and they didn't make their own research. So we find it difficult to unlearn the things that we've learned. And you see, it's a tech age. Since when has everybody been doing tech? Fintech, agri-tech. When I saw agri-tech, I was like, agri-tech again.
Yeah, yeah, it's been on since a very long time. Yeah.
So everyone has been doing all these things, and we are even getting to the age where nobody needs an accountant. You start to hear things like financial analysts, them trying to bring in that job scope into.
At the moment, we have data analysts.
I had an interview with a data analyst yesterday.
Oh, wow. Our time is fast spent, and in your final words, I want to tell us the difference between a business owner, an investor, and a risk taker.
Both are risk takers.
Who are risk takers? The investor,
the business owner and the investor. Because for you to actually start your own business, you are taking risks.
Oh.
Yes, you have it good in your head, in your thought, that if I do this and put this and put this, but it's still subjected to a lot of things.
Yeah.
It's subjected to the people that are willing to run with you. It's subjected to how the strategy you want to put in place too. So some entrepreneurs even have this idea, but they can't put in the strategy. So you need to look for another person to place the strategy for you, and that's where some people may get it wrong. You think that, oh, let's just do this. No, strategy is different when it comes to execution. So both are risk takers, because, and you know, when we say risks, we are talking of uncertainty, right? That means you cannot control, you don't have full control of what is going to happen. So both are risk takers, and both should be applauded, right? Yes, both should be applauded. So both are risk takers, and whatever I'll just my advice to both will just be that before they do or put their money in things, they should make sure that they are actually willing to do it, and they should make research. Research is very important. I don't think there's anything you should do in this world
without research.
Without making research. Is very important.
That will also be my own parting word of the segment today. Whatever you want to do, research, read, learn and relearn rather. This is what we're going to wrap up the show for today. Say a very big thank you to you, ma'am, for your time.
Thank you for inviting me.
Thank you for shedding more light to things, and I hope you viewers at home have learned one or two things concerning business, investment and risk. We'll go on the short break right now to return with the concluding part of the program. Please be on standby.